Good evening, good afternoon, and welcome to the Accendo Traders Group. This is our weekend rapid report for September 7th, 2008. AccendoTraders.com, effective trade plans delivered daily. And each time we come together, we work on our trade plan or our routines to prepare for the next day. And on the weekend, we add a couple things by seeing what some of the experts are saying about the market and checking our sectors to see which ones are moving up and down. We always scan for trades each night. We set alerts. And as most important to me, and hopefully you, is we always want to make sure that we have time to spend with our families. So let's take a look at this week. This week was certainly an interesting week, if none. We saw the Dow, all indexes ended down for the week. Not as bad as they would have if you really take what happened Friday and where Friday opened and where Friday closed. We would have been much further down. This market may finally be back because the traders have returned from their holiday weekend and brought the volume back with them. And I'll just say real briefly, again, when we have like volume, it's just the market becomes more difficult to trade. You still stick to your routines, you still stick to your trade plan. However, you might change your trade plan to take your profits much quicker because the light volume, the market can swing both ways. Don't allow it to frustrate you. Just, change your strategies to take your profits quickly versus trying to go and hold things overnight. Energy sector this week bared and survived the Hurricane Gustav. It wasn't as bad. We need to be blessed about that. It wasn't as bad as suspected. And now we have Ike coming through, and I think they're saying that by the end of the week, Ike will be back in the Gulf region, so we'll see what happens there. And briefly on Friday, again, the market opened up in bear market territory, meaning it was 20% down from the highs of November, October. So, and then again, the market rallied. Now, some talked about that rally being off of Fannie and Freddie and some financial sectors. There was some talk about Lehman Brothers having a potential buyer for its real estate units. But at the same time, we had some negative reports and sales reports and warnings coming out of the tech sector. So it was kind of mixed for the week. But again, it really doesn't tell the picture of what happened on Friday. The market was down and really rallied for into the close. That was really, I think, important. We'll see what happens this week. Still concerns over the global economy. We had some weak same-store sales results, and we had obviously the disappointing employment report from August. We had a warning of that on Thursday, and it did come into fruition on Friday. The government basically announced a decline of 84,000 positions for the month of August when it was projected to be 75,000. This week, not much going on this week as far as news. Nothing really that big. What we're going to be really looking at here again is the traders are back, momentum is back, volume is back. Which way they're going to push the market. Don't really care which way. We'll trade it either way. But let's see if this volume continues and let's see a trend begin to form. So as we look at our sectors this week, and we're going to do it in two portions. One is just looking at the sectors, and then we're going to go back to where we talk about some stocks, not necessarily in our basket of stocks that we watch, but some stocks to watch based upon the sectors. And this week is real similar to last week. The market really could go any way at this point. And remember, Friday really is what's messing things up here, because if Friday would have ended the way it started, then we would have a lot of markets down, would be in bear market territory, and life would be good because we could easily trend the market. But as you can see on Friday, we had some of these sectors had a little bounce. And so, they really could go either way. Now, we were right last week when we said the market was coming up, several of the indexes, the sectors were coming up to the 50. Which way would they go? We thought they would fall from there and make new lows, and most did. So now here we are again, and you're going to see that some of our core sectors are coming up here on the 500 moving average. So we'll have to see how the market is going to react to that. So here's the agriculture sector, certainly in a downtrend, But again, are we going to bounce here by this 500 moving average? Next, we go to energy, and you'll see that this one is even closer to the 500 moving average. It's gone through, and now it's coming back up. So we made a newer low from the 50. What are we going to do? Here's oil. Same kind of thing. Went through the 500, coming back up. Look at metal. You can see, again, another similar pattern here. And, got to wait a second as the software reloads. Same thing here, broke through the 50, 500. So that's what's, these ones here, I feel stronger about going bearish because they have already broken through the 500. But I want to make sure that they're, really confirming below the 500. Here's steel. So I like these three. I like metals. I like gold. I like steel and iron because, again, where they are. But most of the other sectors, you're going to see that they're close to the 500. So we really need a week to kind of give us a day or two to give us a direction of which way the market wants to go. All right, so let's go ahead and head towards our education portion of our video. And once again, we're going to go back to Trading in the Zone by Mark Douglas. And we're on Chapter 3, Taking Responsibility and Reacting to Loss. And on last Sunday, we talked about how you feel when you lose at a trade, when you lose money, when the trade doesn't go the way that you predicted it to. What do you do? Do you move on, or do you feel like you have to enact revenge against the market? And so what a lot of people do, unfortunately, is that they feel like to become a better trader is to know more about the market. And that is true, but it's not true if you go about it in the wrong way. So Mark Douglas goes on to say that he thinks that only now he's going to be smarter about his trades, and that he's going to put some effort into learning everything that he can about the market. This is about a trader who just lost a trade. And it is logical to think that if you learn more about the market, that you will be a better trader. And again, I do believe that. Even with all the different strategies I've learned across the way, but I will tell you that I didn't become a better trader until I said, you know what, this is a lot of information. I'm going to focus on this. I'm going to be this type of trader, and maybe someday I'll evolve to that type of trader, or I'm going to trade these type of options, or I'm going to trade this type of pattern, Forex, whatever it is, whatever you want to focus on that. So there's nothing wrong with learning about the market, but then again, you can get an information overload, and you begin to have mixed signals telling you what to do. And it wasn't until I focused and said, you know what, this is what I am. This is my trade plan. This is my routine. I'm going to be this type of trader. And that kind of goes on to what we're saying here, was that, it's logical to think that learning more about the market will make you a better trader. However, sometimes if you go about it the wrong way, you're not just learning more about the market to be a better trader, you're just getting more information, and it doesn't actually help you to become a better trade. Down here at the bottom, he says he is not learning the market simply as a mean to giving himself a systematic way of winning, but rather as a way to avoid pain, prove something that has absolutely nothing to do with making money in the market and being objective about the market. And that, kind of sums up what I was just saying, is that if you don't learn more information to fine-tune your trade plan, you have a specific reason why you're learning this new information, and instead you want to learn more about the market so that you're not wrong anymore. Well, we're all going to be wrong, and therefore the next time you're wrong, you're going to want to learn more information, and you haven't gone to the root of the problem, which is that you have no systematic plan for how you trade. You trade the trade. Trading the trade, you pretty much will lose money a large percentage of the time. But if you're learning new information to fine-tune your trade plan, to fine-tune how you feel about the market, to fine-tune your mindset about the market, then yes, you're doing what's right. But when you stray off the path to learn more information just to learn new things, or to make sure this never happens again, it will happen again. And since you haven't changed how you think about the market, you're just going to continue in this cyclical event until you learn to come up with a trade plan, come up with a checklist of routines for how you buy your trades. So, to get the full version with all our new trades for the week, or for tomorrow, go ahead and download a podcast version. It would also be on our blog later this evening. Also, you can go to the podcast. Good thing about the podcast is you can just subscribe to that and it pops in there every day. Well, those of you who are subscribed members, the blog version will be there shortly afterwards. And again, always, if you want to get our daily trade plans, which gives our trades and our picks for each day, then you can sign up to be a subscriber at accendotraders.video HTML. Thanks, guys. As always, trade at your own risk, and I'll talk to you next time.